Hello everyone, welcome to today's Blockchain Daily News. Today is April 25th, 2024. I'm your digital host, Amy. The headline we're focusing on today is IMF changes attitude. Bitcoin is already a necessary financial tool. Recently, the International Monetary Fund stance on Bitcoin has undergone a major reversal from its past opposition to its current support. It's a bit confusing. The IMF's latest preliminary study on the cross-border flows of Bitcoin report states that residents of countries with strict financial regulations are turning to Bitcoin to move capital more freely across borders. In countries like Argentina and Venezuela, Bitcoin has become a necessary financial tool to preserve wealth and access global markets, rather than just a speculative investment. You know, in December 2023, IMF President Kristalina Georgie said in her opening speech at an industry summit in Seoul, South Korea, that the massive adoption of crypto assets may undermine macro-financial stability. She also said that mass adoption of crypto assets could affect the effectiveness of monetary policy transmission, capital flow management measures, and fiscal sustainability due to tax fluctuations. Even on April 12th, the IMF asked Salvador to amend its laws to support Bitcoin, because the law hampered El Salvador's efforts to obtain a $1.4 billion credit line. El Salvador adopted Bitcoin as legal tender in 2021 under the leadership of President Bukele. The country has since invested heavily in Bitcoin, building Bitcoin reserves, mining Bitcoin, and launching educational programs. However, the IMF opposed Bitcoin laws in loan negotiations with El Salvador, which needs more financing to repay its debt. Negotiations have been deadlocked for nearly 2 years amid calls from the International Monetary Fund to limit the scope of Bitcoin in the country. Through the content of the latest report, a preliminary study on the cross-border flow of Bitcoin, we found that the IMF stance on Bitcoin has undergone some changes, which can also be said to be a reversal of stance. So what does it mean behind it? What is not difficult to see from the report is that with the passage of the Bitcoin Spot ETF, it is gradually accepted and adopted by the world's mainstream financial institutions, and the scale of free cross-border transfer of capital on and off the Bitcoin chain continues to expand. Bitcoin has become an asset target that the IMF has to pay attention to and study. The IMF's preliminary study on the cross-border flows of Bitcoin report revealed how Bitcoin's decentralized nature can be used to bypass the traditional banking system, especially in regions experiencing economic difficulties or strict capital control. The IMF said residents of countries with strict financial regulations are turning to Bitcoin to move capital more freely across borders. Off-chain cross-border flows appear to be linked to incentives to avoid capital flow restrictions, the report reads. The report highlights a large number of transactions from countries such as Argentina and Venezuela, whose citizens face hyperinflation and strict financial controls. In these regions, Bitcoin has become a necessary financial tool for preserving wealth and accessing global markets, rather than just a speculative investment. However, the IMF report also draws attention to the potential risks of widespread use of Bitcoin for cross-border flows. Cryptocurrency's lack of oversight and anonymity can complicate regulators' efforts to monitor and control financial transactions to prevent illegal activities such as money laundering. The study examined on-chain and off-chain transaction data to explore trends behind the cross-border use of Bitcoin. The study found that Bitcoin transactions are not only huge in number, but also exhibit unique characteristics compared with traditional capital flows. Unlike typical foreign investments, which are sensitive to economic indicators such as currency strength, Bitcoin flows are more correlated with cryptocurrency-specific sentiments such as market volatility and user sentiment indexes, such as the Fear and Greed Index. The analysis also pointed out that on-chain Bitcoin transactions are recorded on the blockchain and have higher security, and their scale is often larger than off-chain transactions. This shows that the powerful security features of blockchain technology can often protect greater financial interests. The International Monetary Fund calls for international cooperation to establish a regulatory framework that covers the unique aspects of digital assets. These measures will help reduce risks while leveraging the benefits of digital currencies as a tool to promote economic freedom, particularly in countries with restricted financial environments. Carbon Chain Value excerpts some of the highlights from the full report for readers' reference. I hope it can inspire and think for readers. Since its launch in 2009, Bitcoin's rapid growth has increased its potential macroeconomic impact. Bitcoin is a publicly accessible unit of account for a decentralized global digital ecosystem. The technological innovation behind it, a sustainable blockchain consisting of a distributed ledger that operates and exists without any trusted parties. Although Bitcoin's price is volatile and not backed by any real asset or government claim, its price and number of active users have increased significantly over the past decade. The global nature of Bitcoin's underlying technology means that a large proportion of transactions are likely to occur across national borders. However, identifying cross-border Bitcoin transactions is far from easy. A key question is the extent to which Bitcoin is used for cross-border transactions. The findings of this article reveal not only the relative importance and characteristics of Bitcoin's cross-border flows, but also its heterogeneity, particularly in terms of on-chain and off-chain transactions. Cross-border transactions using Bitcoin are very common geographically, with the intensity of on-chain and off-chain flows relatively high across regions, but there are also some temporal differences due to data coverage and underlying estimation assumptions. By using more on-chain and off-chain data, we can determine that the average size of on-chain transactions is much larger than off-chain transactions. This pattern likely reflects the security features provided by the blockchain and the fee structure of the Bitcoin blockchain. The estimated scale of cross-border flows of Bitcoin is considerable compared to the gross domestic product of some countries, especially in countries with relatively small capital flows. Analysis of the driving factors of cross-border flows shows that the cross-border use of Bitcoin is not consistent with the factors driving capital flows, and there may be some differences between on-chain and off-chain Bitcoin cross-border flows. While capital flow levels are not directly comparable to estimated levels of Bitcoin cross-border flows due to methodological differences, we derive four important implications. Bitcoin on-chain cross-border flows respond to traditional inflow drivers versus capital. The flow is different. They appear to be negatively correlated with broad dollar appreciation events, but unlike capital flows, they respond positively to changes in risk aversion as reflected in the VIX CBOE volatility index. 2. On-chain cross-border flows versus improvements in specific cryptocurrency sentiment, crypto fear versus greed, are positively correlated. 3. However, neither traditional global capital flow drivers nor sentiment towards Bitcoin affect off-chain Bitcoin cross-border flows. 4. Although domestic factors do not play a prominent role in Bitcoin cross-border flows and capital flows in our sample, inflation and Bitcoin-based parallel exchange rate premiums are associated with on-chain cross-border flows and off-chain cross-border flows, respectively. Positively related. Second, we add to the small but growing literature analyzing the drivers of crypto assets and their relationship to traditional financial assets. Bitcoin price is positively correlated with all intraday macro news, except CPI, and is unresponsive to unexpected changes in short-term interest rates and less robust to news about future policy paths. Can Bitcoin be a hedge against global uncertainty? This uncertainty is measured by the first principal component of the VIX index of 14 developed and developing stock markets. Their research shows that Bitcoin prices respond positively to uncertainty during both higher magnitude and shorter frequency movements in Bitcoin returns. In contrast, there is a strong correlation between crypto asset prices and stock prices as well as the VIX index, suggesting that crypto assets behave like risk assets. Our cross-border findings show that Bitcoin's on-chain flows are positively correlated with the VIX, opposite of the reaction of capital flows. Third, by distinguishing between on-chain and off-chain flows, we provide a nuanced perspective on Bitcoin and capital flow management. Analysis of the cross-border use of Bitcoin highlights different activities ranging from e-commerce to funding related to illegal activities. However, independent of the underlying activity, cross-border transfers via Bitcoin are motivated by perceived high costs or government regulations that prevent transfers through traditional financial institutions. In this context, the role of capital controls has been widely emphasized in the literature. In a recent study, underlying capital flows still occur through traditional channels and provide liquidity to cryptocurrency exchanges. The relative prices of crypto assets in an economy provide insightful information about the strength of demand for capital flight. We contribute to this debate by providing cross-country panel evidence that off-chain cross-border outflows are positively associated with the Bitcoin parallel premium, which we interpret as a broader proxy for exchange rate pressures reflecting macroeconomic imbalances. Overall, our analysis shows that cross-border Bitcoin flows and capital flows respond differently to traditional drivers. That is, we find that increased risk aversion and a stronger dollar lead to lower inflows. Unlike capital flows, the analysis shows that financial flows respond positively to changes in the VIX. This result is consistent with the positive correlation between the VIX and Bitcoin returns that has been widely emphasized in the literature. Chainalysis traffic is also positively correlated with cryptocurrency sentiment. While global fundamentals appear to have a limited role in local Bitcoin flows, we find that outflows increase significantly as the Bitcoin parallel exchange rate premium increases. Conclusion: the use of Bitcoin has grown rapidly over the past decade. The global nature of Bitcoin raises questions about the relative importance and characteristics of cross-border flows of Bitcoin. The task of studying the cross-border flows facilitated by Bitcoin is further complicated by the sheer volume and anonymity of Bitcoin transactions both on and off the blockchain. Our analysis highlights some differences between on-chain and off-chain Bitcoin cross-border flows. On average, cross-border on-chain transactions are much larger than off-chain transactions. Off-chain data also suggests that increases in Bitcoin-based parallel exchange premiums correlate with higher outflows. These findings are consistent with a large body of recent research suggesting that Bitcoin helps circumvent capital flow restrictions. As highlighted by the IMF, policymakers aiming to manage capital flows should ensure that crypto assets are covered by capital flow management regulations. From a more structural perspective, it is of course also important to address the underlying imbalances that manifest as exchange rate pressures, as the use of crypto assets is only a symptom of imbalances. We also find that countries with relatively large capital inflows tend to have lower Bitcoin inflows, and vice versa. Furthermore, cross-border flows of Bitcoin respond differently to traditional drivers than capital flows. On-chain flows appear to be negatively correlated with broad dollar appreciation events, but unlike capital flows, they respond positively to changes in the VIX. Due to methodological differences, capital flows and Bitcoin cross-border flows cannot be directly compared, but we speculate that Bitcoin cross-border flows have not yet replaced existing capital flows. Therefore, capital flows remain the most important quantitative channel for global risk aversion and/or flight to safety trigger spike propagation. However, the cryptocurrency market is developing rapidly. The recent authorization of a spot Bitcoin ETF in the United States suggests that Bitcoin may be increasingly used by mainstream financial operators, even if indirectly. As the average user bases of Bitcoin and traditional assets get closer, the response of Bitcoin's cross-border flows may become more similar to the response of traditional capital flows. This user convergence will certainly complicate policy responses. Because Bitcoin is a decentralized and anonymous cryptographic transaction technology, measuring the cross-border flow of Bitcoin is challenging and can currently only be achieved through a series of non-simple assumptions. Although we provide a comprehensive approach to studying global cross-border flows that explores on-chain and off-chain flows, our dataset does not capture the full scope of Bitcoin cross-border transactions. Therefore, improving the measurement of flows based on transaction-level data and identifying the residence of on-chain and off-chain cross-border flows is key to gaining a deeper understanding of Bitcoin's cross-border dynamics, assessing future policy needs, and designing appropriate countermeasures. Alright, that's all for today's blockchain news headlines. I am a digital persona created entirely by artificial intelligence. If you enjoy my program, please like, subscribe, and share my video with your friends. AI GPU is AI technology that everyone can truly use. See you tomorrow.